Imagine it's January 1st, 2025, and you have 10,000 US dollars in your hand. Now, would you put this money into gold the old-fashioned way, like our ancestors did, under the mattress? Or would you rather buy bonds with this money and earn interest income? Or would you invest it in the S&P 500? Would you invest in Bitcoin? Or would you rather squander it on altcoins? Exactly 1 year has passed. We're about to close out 2025. And one of the investment tools I just mentioned is this one. While one turned $10,000 into $25,500, another dropped it to $3,300. So choosing the right investment tool is more important than anything. Today, we'll look at the real winners of 2025, discuss the reasons behind their success, but more importantly, we'll talk about 2026. We'll examine what is expected from different investment tools and which ones show more potential. Let's get into our video. Friends, welcome back to my video. I'm the Count of Monte Crypto. Today's topic is investment tools. Silver, gold, Bitcoin, financial instruments. We'll be looking at these. Most of us make the same mistake when investing. Everyone talks about the winners. We don't talk about the risks. We don't really talk much about the losers. Right now, silver and gold are constantly being discussed. These are instruments that have really shown a significant increase. And right now, I'm actually talking about levels where entering is risky. In other words, these are times when entering collectively is risky. But everyone talks about the winners. In fact, you need to sell what everyone is talking about and buy what everyone is afraid of. Of course, it's also very important to time these things right. Instead of approaching it with a very simple criterion, it's crucial to get the timing right as well. But if we move at the same time as everyone else, we can't break away from the herd. When we look at 2005, some people said this, interest is the guaranteed best option. Who said Bitcoin skyrocket, 2025 is the year of Bitcoin? When we look at past cycles, that's how it seemed anyway. Some people said that real estate always makes money, the most guaranteed method. Now, everyone can take their own risk, make investments to their profile. So not all can take same risk or weight similarly when in profit. That's why not every investment vehicle is suitable for everyone. Which investment vehicle is right for you? You need to understand this very well. And how has each investment vehicle performed? For example, silver has performed well. Is this suitable for me? You will try this and you'll understand it in 2026. You have to keep track of your results every year, even if it's at a loss. Open up an Excel sheet on Google. Say, this year I invested this much in such and such. I invested this much in dollars. I invested this much in interest-bearing accounts. I bought this much gold, and these were the returns I got. So what are the risk levels? I didn't feel at risk with gold. You need to learn your own profile, like how I gave up on profits in the stock market because I felt it was too risky annually. Just like companies do, you also need to see your own performance on a yearly basis. Am I making a profit? Am I at a loss? Am I investing, diversifying my portfolio? You might say, I have a house. I have nothing else. You might say that. In that case, you'll create an Excel sheet like this. My investments, real estate 70%, gold 10% for example, or interest 15%. Again, create your profile and try to balance these among themselves. At the very least, yes, the house you live in should always be yours. But after that, before making a second real estate investment, it's always better to diversify your portfolio. You need to do it in a balanced way. What does Warren Buffett say? You don't carry all your eggs in one basket. Now, I'm turning back to the performances of 2025. Who made how much profit? You might expect me to start with silver, but here I made a distinction. Let's start according to risk profiles. So, which is the lowest risk investment tool? Interest. Lowest risk means that it also means the return is low. So as risk increases, the potential return also increases. The potential for loss rises. If risk falls, gain also goes down. Loss also goes down. This is a simple logic. The greater the appetite for risk, the greater the reward or the greater the loss can be. Now, I've separated these profiles. I'm starting with the low risk group. I'm starting with interest rates. I'm starting with US bonds. If you had invested $10,000 in US bonds at the beginning of 2025, your annual interest income would have been $500. Bond prices also increased. Because they increased, you would have earned another $200. So your $10,000 would have become $10,700 total. Now let's move on to the medium risk group. Actually, gold is between low and medium risk. It's been around as long as humanity has existed for many years. It doesn't deteriorate, it's easy to store, and it's very durable. And its supply is limited, and production isn't that easy either. And at the same time, it's also used in industry. It's gold, that's why it's also considered a precious metal. It really is valuable. I mean, we pay a fortune even for a gram of it. If, like our ancestors, you had set aside your $10,000 at the beginning of the year as gold to stash under your pillow, gold would have turned your $10,000 into $17,300 by the end of the year as of today. I'm talking about a very significant increase. Gold delivered one of the record increases. It really performed very well. So what would have happened if we had invested in silver? This is where the real show begins, friends. Silver truly had a record-breaking year. There are hardly any other investment vehicles that have yielded so much, so quickly, in such a short period of time. The price of an ounce of silver rose from $29 to $74. Friends, in other words, your $10,000, just a moment ago, it was trying to reach $80. But I'll explain it based on the price at the time I prepared the video. Your $10,000 would have become $25,500. This is truly a record-breaking gain. We can really say that silver put on a show. Why are gold and silver rising? Of course, there is also demand for their use. But especially due to central banks and geopolitical risks, governments have turned to gold and silver. Friends, now my favorite investment? One vehicle is an ETF tracking the S&P 500. This falls into the medium risk group. So the S&P 500 yielded a 17% return by the end of the year. In other words, it raised your $10,000 to a nice level, like $11,700. The annual return rate was very good. Real estate is also an investment vehicle in the medium risk group. I think it's a very valuable investment vehicle. Now, I have examined some real estate indices, both in Turkey and around the world. Friends, when we look at the prices here, overall, it provided an annual return of between 7% and 10%. So it yielded a return between $10,700 and $11,000. Of course, since it is also close to the low-risk group, the rate of return was a bit lower. Now we've come to, what did we say? High risk, high chance of winning, but also a high chance of losing. Let's look at Bitcoin. Right now, you can see the Bitcoin chart in front of me. Friends, Bitcoin has experienced a 6.7% decline this year. Actually, it gets a lot of criticism, but in my opinion, it didn't perform badly at all. Yes, it might be remembered negatively because of the loss, but it was a year full of expectations. It caught everyone off guard, but we're not talking about a record-breaking crash either. It posted an annual loss of 6.7%. I wish it hadn't. So, your $10,000 dropped to about $9,330, around that level, if you had invested all your money in Bitcoin. Now, I'll get to the embarrassing part. The real embarrassment, friends, happened with the altcoins. We're going to look at a few altcoins here. Quickly, AVAX is very famous. If you had invested your money in AVAX, friends, it experienced a record drop of about 67%, and your money would have fallen to $3,300. So you would have gone from $10,000 down to $3,300. Now let's look at another asset. Aptos. Again, it was one of those legendary fast coins from our side. It dropped by 81%. You would have had $1,900 left. TIA was also one of those coins that certain influencers never stopped talking about, and it experienced a 90% drop. Your $10,000 became $1,000. That's why it's very important to choose the right investment vehicle. Assets in the risky group, for example, are very high risk, like altcoins. In that case, you need to allocate a very small portion in your portfolio, for example, around 10%. This way, you balance out the risk. So when a 10% asset drops by 90%, your total wealth only decreases by about 11%. That's why you need to manage your risk. By the way, we're not talking about short-term hype, but a long-term roadmap. If you think the same way, you can subscribe to our channel and continue the journey with us. So what will 2026 be like? What should we be looking at? I'll talk about these quickly. Again, for 2026, I'll be looking at gold, silver, the S&P 500, and Bitcoin. All of these are among the most attractive options for me. The S&P 500, why? Because interest rate cuts will continue next year as well. Company profits will increase. This shows that the S&P 500 could once again provide a good return this year. Honestly, when we look at the long-term annual returns recently, I think the S&P 500 is very good. Gold and silver have increased a lot. If they hadn't risen so much, it would be a huge risk for me. Let me show you an example to illustrate this. Now friends, look, this is the weekly chart of gold. I've shown this before as well. Let's say someone bought gold enthusiastically in 2011, let's say. That person waited in the red for about 10 years, friends. They waited without making a profit. Why is this a risk? Because at that time, it also increased extremely rapidly and they were stuck for 10 years. But after those years, now it has brought in much more profit all of a sudden. We can see from past data that gold is always a profitable instrument in the long run. But buying it cheap is very important. This means, yes, it increased very sharply, but we can't say that it will drop from here and leave people stuck on the wrong side. Because China, Russia, and some central banks are now seriously saying, this is our reserve currency. They have started to call gold their reserve. This is also steadily increasing the demand for gold and silver. So yes, I can't go and buy gold and silver with all my money. But the upward trend in gold and silver could continue into 2026. So what can I do? Let's say I have $3,000. I want to buy gold and silver instead of buying it all at once, it's more reasonable to split it over 12 months and buy a certain amount each month. Let's say you bought, and as I said, there was a crash in March. Then in May, June, July, August, and September, you can lower your average by buying at cheaper prices. When it comes to gold and silver, I can't stay out completely, but I'm also not rushing to buy either. I keep adding to my portfolio in a balanced way. Now, Bitcoin is one of the areas we care about the most. Liquidity will also increase, friends. Some positive developments regarding 2026 on the Bitcoin side. I'll talk about these in the next video. What awaits Bitcoin in 2026? There are some important and positive developments. Liquidity is increasing, friends. That's why, yes, and when we look at the past cycles a bit as well. For the first time after the halving, we experienced a red candle, but this red candle will pass. This year needs to be green. That's why, friends, I think it could be Bitcoin's year. Again, 2026. In other words, it could be a good year for Bitcoin. I'm not saying it's the time when it will put on its biggest show, though. Now, maybe when I say these things, you might curse at me. But among all these, gold, silver, the S&P 500 interest rates, the most realistic future for me is Bitcoin. Friends, the money is in Bitcoin. And you'll say it doesn't make money. No, friends. When you look at Bitcoin's chart, right now you can see the chart on the screen. Despite everything, in the long run, in other words, in the medium to long term, Bitcoin has delivered the strongest returns. There have been pullbacks over the past year, but Bitcoin has always put on a show. Friends, I'm not talking about altcoins. Altcoins have turned money into nothing, but with Bitcoin, friends, it turned nothing into money. 2026 could also be a good year for Bitcoin. We've talked about the one that made the most profit. We've talked about the one that lost the most. But what I really want to emphasize to you is that you can't just look at these and say, for me, or my investment vehicle is altcoins, my investment vehicle is silver. You need to know yourself. You need to know what kind of investment profile suits you. And when making your investments, you need to act according to that profile. You should only take as much risk as you can manage. Make your investments this way. Of course, nothing in this video is investment advice. Investment vehicles and financial instruments are risky. We could lose all of our money. Our goal is to learn something, to avoid mistakes along the way and build a good portfolio. And our ultimate goal is to achieve financial freedom. Wishing you all to achieve financial freedom. See you in the next video. Goodbye.